This is the FFR Trading Market Minute, and this is, again, a daily candlestick chart of the SPY, the ETF for the S&P 500 that we've been tracking. Now, last week, this is where we were. I circled the candle here. That was Wednesday last week, and we had our oscillator here in overbought territory, and I said we should get at minimum a couple of days of pullback. Well, we got 2 red days in a row there, and that was it. We were able to close above the neckline. Again, that's the neckline to this head and shoulders pattern. That head and shoulders pattern did break down. We came within a couple dollars of the target there before the market reversed into the Fed meeting. We reached the neckline there. Again, breached that, closed above that. The next level resistance, well, we gapped up above that. Right, and here we are Wednesday, gapped up above that next level resistance. And so the last resistance level before we're going to potentially make all-time highs is right here. So what I'm expecting for the rest of the week into next week, I actually think because our oscillator, again, is getting into overbought territory, but we may have a little bit of divergence. Now it's Wednesday, the market has not closed yet. So if the market continues to push higher, we may not have any divergence there. But we're, again, in an area, we've had a pretty strong move up here. So I'm anticipating we should get some type of pullback into this support. And then we'll see if that level holds. Then we can potentially, maybe we get that Christmas rally and we can test this level. And maybe our Christmas gift this year will be a break to new all-time highs. If they do pull back and this holds as support, well, if this gives, well, you've got a gap fill below here, and you've got the neckline, which was resistance, becomes support now, and so that's a possibility to the downside if they pull back. Right, so one of those levels are a possible pullback zone here, but very strong move up here. Now, if for some reason the bulls are not able to hold this level, we've got a lot of gaps below the market to potentially fill. Again, those fill about 80% of the time, so chances are we will see those levels again at some point. But at this point, very, very bullish move, not only into the Fed, but at the neckline here, breaking that, and some very strong gaps to the upside. But we are, again, overextended. We should see a pullback at least minimum into this level, potentially filling this gap here and reaching this level before the market tries to march forward. And maybe we get that, again, that year-end rally here. Some of the important economic data points next week: Tuesday's FOMC minutes at 2 p.m., Wednesday's durable goods, initial jobless claims, and Michigan consumer sentiment, and Friday's S&P Global Manufacturing and Global Services PMI. Hope that helps. Have a great rest of your trading week. We'll see you back next week in the FFR Trading Market Minute.